Reddit just went public today. The stock started trading. It is up huge, up 54% as we speak. It got over 60% gains for the day this quickly on the very first day. Now, guys, of course, as we all know from watching the channel and our Everything Money regular channel, every investment is the present value of all future cash flow. And when you buy a stock, you are buying a piece of a business. So the question is, how good is the Reddit business? Well, let's pull up some of their financials. Guys, look at this annual growth, okay? So 2020, even though they weren't public then, they report this data. They did $228 million in revenue. That's huge. Against a cost of goods sold of $55 million. That means their margin, their gross margin is 173 out of 228. That's very, very large. It's almost 80%. Somebody do the math for me real quick. Gets even better. 485, 666, and last year they did $804 million with only 111 million cost of goods sold, which made their margin 85% plus, right? Because 693 divided by 804. That's huge gross margin. But here's the downside. Here's the net income. Minus 60 million, minus 128, minus 158, minus 91. Does that mean the stock should be avoided? No, not at all. Just like, does this mean the stock should be bought? No, not at all. There is some sort of path along the way for Reddit to make money. If you come here and look, their operating expenses are huge, absolutely huge. But for a company like Reddit, as they grow and grow and grow, their operating expenses probably aren't going to grow along with it. Even though here they have. So guys, look at this. They spent more operating the company than they even brought in revenue. By the way, I believe it's Serena Williams' husband is the co-founder of Reddit. So they just saw a big jump today in liquid availability of their net worth because the company is currently valued. How many shares outstanding do they have? We don't know yet. So 51. So let me look at this. How many shares outstanding? How many shares outstanding does Reddit have? At an IPO price of $34 a share, it'd be 5.4 billion. So that means they have 5.4 divided by, they have 159 million shares outstanding times the current price of $50 a share. They're an $8 billion market cap company right now. $8 billion market cap company that has $800 million in revenue. 880 million, whatever the amount, 800 million, that's 10 times price of sales. But that's high, but they have a lot of growth potential. They have a huge gross margin. This gross margin, guys, I'll just show it to you right now. 693 divided by 808, was it? 85.8% gross margin. Every extra dollar they sell, 86 cents of it goes to the bottom line to pay their taxes and their overhead charges and everything. That's a huge, huge number. That's bigger than Microsoft. That's bigger than NVIDIA. That's bigger than Google. That's a huge number. That's on par with Palantir. So I look at this saying, great growth potential. But when you have losses, you got to pay for it somehow. How do you pay for losses? Two different ways. You issue debt. Okay, you borrow the money, or you issue equity. You issue more shares to get more equity and to get more money in. Remember, when you issue shares, you're diluting past investors. So that's a concern I have with Reddit, okay? Now again though, incredible business. I believe this is where the whole Wall Street bets started, right? Wasn't it a Reddit community? Reddit is awesome. They got amazing potential and they're growing like crazy and people absolutely love it. Let's see what else we can find out from the financials. Let's see their report on the balance sheet. So their balance sheet, they have total current assets of $1.5 billion. That's a lot. And let's see what their total liabilities are. 1.876. Guys, they could almost pay off all their debts with just the total current assets. Now, total current assets are split amongst cash, receivables, etc. Total current assets, how much of it? Receivables are 250 million of it, but the rest of it's all cash and things like that. That's incredible. Look at this cash. Cash and cash equivalents, 400 million. Short-term investments, 812 million. These could be just treasuries. That's incredible. So the vast majority, oh my God, they're awesome. I love these guys. This is incredible. This is a great balance sheet too. This is a great balance sheet. Let's look at their, I just ignore long-term assets. I don't even care about that. And look at that. It's such a small amount of money. Long-term assets of $116 million. It's a joke. Give me a break. Let's look at their liabilities. Long-term liabilities, preferred securities out of shareholders' equity is $1.85 billion. This is preferred stock, guys. So this not, I mean, yes, it matters. It's a liability, but at the end of the day, it's not like it's a liability to a bank. There's probably not going to be any sort of like, you have to look into it, but there's no covenants that could be broken that trigger something. It's more of a preferred stock. They get a preferred rate of return, and maybe they can convert to regular equity or something like that. That's incredible. So the question becomes, guys, this is going to be purely a question of how fast can they grow and how fast can they get their bottom line to be profitable. 10 times sales. It seems expensive. I think, to me, my personal opinion, for me, the biggest question I ask is, are they going to issue a lot of shares along the way to dilute me? That's the biggest issue I have. How fast they can get the profitability so they don't have to do that. You know, look at a company like Palantir. We look at Palantir in our community, in our software. And let's look at the income statement, and let's go quarterly. Down here at the bottom, the shares outstanding. This is a cash flow positive business, and they're still diluting people. Probably because of, okay, look at this. Shares outstanding, average diluted shares outstanding. If all the options got triggered. There's a lot of options getting triggered here. It's increasing the number of shares outstanding. Even though they're a cash flow positive business, they still have options out there for employees and other things like that. So Reddit's probably the same thing. Now, the other question is, does Reddit pay its executives in line with the things that the shareholders want to see? And this is what I want to bring up. Reddit CEO Steve Huffman, the co-founder, defends his $193 million compensation. So the question you have to ask yourself is this appropriate for the CEO of the company, who is also a shareholder, merely the fact that he is a founder? That's the question we have to ask. It's a tough question, because I truly believe that every CEO should be compensated fairly based on their bringing a lot of value to the table. Are they bringing a lot of value to the table? I don't know. He was a founder. He probably is bringing a lot of value to the table. But the question is, what gets him this full compensation package? That's a lot of money. That's a lot of money. And I'm a big believer in, I don't like the whole golden parachute idea of, hey, if somebody fails at their job, they should still get a $40 million check, $50 million check. No, I don't believe that. I have not delved into the information to see what this compensation is about. It'll probably be in some sort of offering document they had, but this is a lot. But remember, I want to make note also, it's not the same as compensation, but when Facebook first went public, the big criticism was Mark Zuckerberg had all the voting. Like, I think it was some absurd number, like 94% of the voting shares. And everybody's like, that's terrible. He shouldn't do that. All right. I'd rather have him, the founder, get compensated through voting rights, in the sense of like, hey, if you want your control to be that way and you get compensated along with shareholders, great. But if he co-owns this company, to me, it's like, well, you're already going to get compensation by the fact that you're going to own these shares. They're now going to be liquid. And as it grows and gets better, you're going to make more money. That's the way I want to look at it. So like in our community, I already asked today what everybody thinks, and that's the notification I got, because we're big on having these conversations. What does Reddit mean? What does this IPO mean for everybody? Not just Reddit, for the investors in Reddit, for the CEOs of Reddit, for the people looking at Reddit, because a lot of people love going to Reddit. They love it. I used to post on Reddit years ago some value ideas I had, and I used to, but I got blasted on them, and rightly so. It was funny because that's the community I went into. The Reddit community seems to me to be a little more conspiracy theorists, crazy. Am I wrong? That's pretty much what it is. Yeah, I'm not wrong. But it's a great community of people. They really love going on there. Now, with that said, if I ask a question into Google and I see a Reddit line in there, I ignore it. Not for any other reason than it's like Quora. I want to make sure I find a reliable source I can sit there and attach my question to say, okay, is this accurate or not? But, look, people are responding to my comment. I'm looking at this saying, Reddit's a fast-growing business with a really high gross margin. That in and of itself is interesting as hell to me. Question is, how are they going to monetize it more and more and more? How they can get more advertising dollars in? They've done a great job of bringing those ad revenue in over the last 4 years. And they've picked a great market, a really hot market right now to sit there and go public, as is evidenced by the fact that the stock is currently up 47% if you got the initial shares. Okay, 47%, $50 a share. It's pretty awesome. Good for them. Now, guys, you might have the FOMO right now and you're watching this video to learn about Reddit. I'm trying to teach a process that's more higher level, and better yet, I'm trying to teach the emotions of it. I don't want you to have FOMO about Reddit. I didn't buy the Facebook IPO. I didn't buy the Google IPO. I was given shares of the Google IPO. I said no. I'd much rather wait for the company to see its way through, see if it's successful, see if it can hit a few goals before I buy. And that might sound counterintuitive to you, but the best investors ever are the ones that put together process and emotions. In order to have you be better on one of them, I'd rather have it be the emotions, because that's where everybody makes the biggest mistakes. And everybody's done it. I've done it. Warren Buffett's done it. All the great investors have made big emotional mistakes. But if you're able to keep those emotions in check, you will see a much better result in the long run. And that's exactly why I spent millions of dollars of my own money creating this whole community. So I can go into our chat and say, hey, what does everybody think about this Reddit thing? The other day I had a question about eBay. What do you guys think of eBay? It allows me to hear other people's inputs because of thousands of people in there. And I use our community, our tools, and everything like that. So if you want to change your outlook and your emotion on how you look at investing, join the community. Click the link below, $7 for 7 days. It gives you a sneak peek, gives you everything here, but allows you 7 days to make the full decision on if you want to join. So again, click the link below. I guarantee you are one connection away from changing your entire outlook and financial future. So with Reddit, my personal opinion on Reddit is, I think exciting. I'm going to watch it, but I'm going to watch the shares outstanding the most. I want to understand how they're going to fund those losses because it's a great balance sheet. I mean, the balance sheet's big, and I look at it going, well, they haven't been generating cash. Actually, let's pull the cash flow statement and see how it's looked. It's got to be negative. Remember, cash from operations less your capital expenditures. Well, when you have negative cash from operations, it's really difficult to have. It's really, really difficult to have positive free cash flow. By that, I mean it's impossible. Let's go to annual. Cash from operations was, it's been negative every year, which makes sense because they've had high operating costs. But their capital expenditures, guys, are not big. Look at this. Very small. I mean, listen, it's like 1% of revenue. Who cares? That's what I love. This is a great business that if you can buy at the right price, you don't have to spend a lot of money to keep it going. This is the network effect. As more and more people use Reddit, more and more people are going to use Reddit. So it has potential for being a really, really great company. But got to remember, if you overpay for a great company, you could end up losing a lot of money. Look at Amazon back in 2000. It fell 95%. It went from 113 a share to 6. It ended up going its way up, but the fundamentals were getting better even as it fell 95%. That's the kind of thing you want to be careful about. Don't forget to sign up for our community at the link below. And if you want to see the 13 companies that I currently own in my portfolio, please watch the next video. Thank you very much for your time.